Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Sunday the 28th of March, starting off with 88 Energy, where there's a whole host of bullish signals here of late. We had the gap through resistance in September. We had another gap through resistance earlier this month, which was obviously the main highlight of the recent price action. Long candle through resistance following the gap. We actually also closed that gap down that we had in February, so that was another plus. And current situation, the reason for including the stock in the Bulletin Board Heroes today is the very strong candle on Friday, that great hammer candle, like a cork in water type rebound. So opening near 1.75, going down towards 1.45, and then bouncing back to where it started. So that is pretty impressive. That should be enough to give us a journey towards 2.5 pence by the end of next month, and that's a resistance line there from March last year. Currently an early end of day close back below Friday's intraday low at 1.45 would even begin to delay the upside scenario. Gaps involved as far as Ascent Resources are concerned. It could be an early bird opportunity actually for the longs, and we've already actually had a key reversal to the upside on Thursday. We actually closed above the bottom of the gap down that we had earlier this month, the bottom of the gap there at 7.4 pence. So the end of day or in the end of week close above 7.4 pence could be enough to take the shares up towards the top of the gap there at 10 pence. And obviously an end of day close back below 7.4 pence would cancel out that particular scenario. But nice little setup there. If you are a fan of the shares, I suppose you might even hold out on the long side while there is no end of day close back below the 200-day line, which the shares double bottomed off over the course of last week. That's at 5.7 pence, but 7.4 could be the tight stop loss there for the bulls of Ascent Resources. Onto a stock which doesn't get too much airplay here, but is back for this occasion. Here we've got Bluebird Merchant Ventures, and the reason for not too much airplay is that we've had the shares bull trapping through 6 pence in November and then sliding ever since, but looks like we've broken that resistance line there around the 3.7 pence level, and while we're above that looking for further gains, I suppose the best case scenario target at this stage would be back towards 5 to 5.5 pence, which was resistance on the way down. If you're cautious though, you'd wait for a clearance of the 200-day moving average of 4.18 pence before targeting the upside. The bulls would be looking, I suppose, though, for better price action than what we saw in November. There's a possibility, I suppose, if we really get off the ground, for a move towards that resistance line projection there from April last year, promising a 7 pence target over the next 1 to 2 months, provided we hold above the 50-day moving average area, 3.5 pence or so, just below the resistance line there from November. On to Eurasia, which typically managed to sneak out some news after the close on Friday. Eurasia being Eurasia, though, it actually sneaked out some very good-looking news for a change, and here we got a situation where we had everything set up, really, I suppose, even before the news. Was that a triple, quadruple bounce off the 200-day moving average since January? That's pretty strong stuff, and that shows a very, very strong foundation for the shares. The other point to note, obviously, is that we had that gap higher in February, which remains unfilled, even despite that tree shake that we had in January. Higher low above the top of the gap is a very strong signal as well, and you'll hear me say that on many stocks over the months and years. The current situation, though, is that we're looking for a break of that resistance line there from December. Call that at 30 pence, so an end of day close tomorrow, Monday, through 30 pence, and we could be on our way towards a long-awaited move to the July resistance line projection from last year, as high as 60 pence. This stage only back below the 200-day moving average, well below it, maybe on a weekly close basis, an extended basis. That 200-day line at 24.92 pence, and if we break that, would one really be a negative on the shares, and negative would only mean a delay to the upside, not really being bearish at all on Eurasia at the moment. Going on to a stock which is not quite in the same category in terms of stock market awareness, but here we've got Europa Oil Gas, and a nice bear trap rebound off the 50-day moving average on Friday at 1.57 pence, and while we're above the 50-day line on an end of day close basis, looking towards the top of the rising trend channel from the beginning of last year at 3.5p as soon as the end of May for Europa Oil and Gas. Moving on to a stock which I know is the punter's favourite, largely because it's such a small fractional share, and also because plenty of shenanigans going on at the company, at Iconic Labs, but it seems to be pieces broken out, things looking rather more smooth, and the shares are reflecting that. In fact, from a technical point of view, when we closed above the top of that gap down from January at 0.0064, then that was putting the shares into bull mode. We also broke a resistance line there from September, all around the 0.005 level, and since then, decent consolidation. So the view at this stage is that while we're above 0.005, we've got a best case scenario target here as high as the top of the broadening triangle from September at 0.03. If you're cautious on the shares, maybe just be targeting the 200-day line initially at 0.011, and also leaving it for a weekly close above 0.011 to then target 0.03. Moving along to Cadence Minerals, which is a request today, and good to see it back, a stock that I don't really cover enough, I think. The reason for not covering it that much is the way that we have a rising trend channel, which has been in place since, I suppose, this time last year. Floor of the channel currently running at just below 18p, and while we're above that, looking towards the top of the rising trend channel, the April resistance line projection currently promising a target as high as 27p, ideally by the end of next month. On to Mkango, which has been a decent situation, probably actually rather stronger and better than one would imagine. But here we've got a steep rising trend channel that's been in place since October. Shares have bounced either at or just below the 50-day line since that time, which is very impressive, especially given how steep the trajectory is. That's 50-day line at 19p, and while we're above that, looking to the top of the trend channel from October at 30p as soon as the end of next month. You can see there was a gap there to the upside last month. It was only partially filled, which is a decent signal in its own right, and that means that we're expecting 30p to be hit relatively quickly. One of the more obscure ones coming up now, Mobile Tornado. Here you can see that the shares have been able to deliver a much higher low, well, I suppose at 4p, a bit of a bear trap through that late January support, but basically a higher low versus what we saw at the end of December, just towards 3.25p. And while we're above 4p, looking towards at least a retest of last year's peak around 6.75. Best case scenario target here over the next 2 to 3 months up to 8p, which is a line of resistance from the early part of 2019. Interesting situation with Oxford Biodynamics. Here we had decent news, very decent news actually from the company. It was typically not really appreciated, especially given the way that the market as a whole sank towards the end of last week, especially on Wednesday, Thursday. But a decent move on Friday in the form of a key reversal to the upside. We temporarily broke Thursday's low and then closed above it. So that's a decent signal there. Support coming in above the 200-day moving average at 77.3p. So that's a +2. And that does suggest we're looking for a retest of last week's peak, which was around £1.25. And at this stage, only an end of day close back below the 200-day line at 77p, really delaying the prospect of 125 plus, and in fact up towards 135, which is that resistance line projection from back in May last year. So looking quite perky as far as Oxford Biodynamics is concerned. Another stock which has been very perky by definition is Orphan. Reason for saying that is that we managed a weekly close at a new all-time high. I see that Carl Friel's been in the Sunday Times as well, which is very nice too, and good story there about Immutex. The view now is that with a weekly close above the old peak at 33p, we're looking for a target here at a May resistance line projection as high as 50p as soon as the end of May. At this stage, only really back, well back below 30p, really delaying the upside scenario. We could probably call that the 50-day moving average as the trading stop loss on that idea. Stock which I think has made its debut, or is making its debut on the Bulletin Board Heroes, is Spectra Systems. I saw somebody talking about it on Twitter. It's obviously a badge of honor of some kind. Here we've had very strong price action in the sense that there was the gap down there in June, a gap higher for September, which remains unfilled, which is one of our favorite scenarios. In fact, We had another gap, 2 gaps higher in September, which does suggest that there's a pretty strong price action or buying action behind this stock. Island reversal as well, which is the gap down in June, and then the gap higher for September, or the gaps higher. Current situation is we bounced nicely off the 200-day moving average area at 161, and a weekly close above £1.80, which is the October resistance line there. Should be enough to take the shares up to £2.30 at the top of the rising July trend channel. But given how strong the price action has been, you almost don't have to wait for any break to the upside. It looks like the bulls have done their job. Finishing off with more usual fare in the form of Union Jack Oil. Managed to sort of logically think out that little move that we had below 30 pence to start this month, a sort of extended bear trap. So the real floor here, probably the floor of this rising trend channel from October at 33 pence, and while we're up above 33 pence now, looking for 50 pence at the top of that October rising trend channel. This stage only really back below this month's 28 pence low, really delaying the upside scenario. But as I said, I don't expect anything sub 33 pence for Union Jack Oil now. That's it for me today. More updates tomorrow.